Hello everyone, it's Wednesday, November the 9th, and I'm David Song, currency analyst with dailyfx.com, and really a big day we have today, a really sharp shift away from risk-taking behavior, and as a result we're seeing the low-yielding currencies, namely the US dollar and the Japanese yen, rallying against its major counterparts right now, and we'll get straight into price action. Very interesting development here with the euro dollar. So, euro dollar, we saw it break out of that narrow range carried over from the previous week, now making a run at that 50% Fibonacci right around that 135 level. So should we see it get there, could see potential support right around that 135 level, but anything below that could threaten this rebound that we have from that 130, 145 level. And really, as we have this really political shuffle in Greece and Italy, all eyes will continue to weigh heavily upon the euro area, and really in terms of what sort of developments we'll see over the remainder of the week. But right now, really just a lot of concerns around the euro area. Beyond a lot of this political uncertainties, we did hear from an advisory group to the German government saying that they did actually lower the outlook for Europe's largest economy. So indeed, it seems as though we'll see growth continue to taper off in the euro area. But not only that, the group actually expects the European Central Bank to actually scale back the benchmark interest rate further at their next interest rate decision scheduled for December, and they expect to see an interest rate of 1.0% heading into 2012. So keep a close eye on those interest rate expectations from the ECB. But beyond that, and especially as we do see the bond market is telling us a really dismal story for the euro area. Indeed, we saw the yields tied to Italian bonds reach a record high, and in terms of that, as it breaches that 7% mark, it seems as though could see a potential Italy bailout or talks of that coming up just over in the following days. So keep a close eye on that. But right now, in terms of that, we might see the ECB take additional steps and really go beyond just lowering the benchmark interest rate and look to expand its non-standard measures further over the next few months. And in essence, it seems as though we'll see the ECB carry their easing cycle into the following year, especially as the ECB sees the economy slipping back into the recession. So I do think that potentially we'll see this reversal from that 142.46 level, gather pace, could find some near-term support right around that 50% Fibonacci. But again, I do think that we have the potential to threaten that rebound from all the way back in October. And in essence, we might see that you're really trade heavy going into 2012. But taking a look at the pound here, really coming up against near-term support right around that 158.90, 159 level, just threatening that range from earlier this month. But right now, we do have the ECB interest rate decision on, or actually the Bank of England interest rate decision on tap for tomorrow, which I'll be covering in the Daily FX live trading room. But for that, don't expect to see much, as we expect the BOE to keep the benchmark interest rate at 0.50% while maintaining its asset purchase program at £275 billion. So in terms of that, we might not, or we might see the MPC refrain from releasing a policy statement. So in turn, we'll have to not only look forward to the BOE minutes, but also the quarterly inflation report that we have coming out later on this month. But in terms of that, we might, should we see market participants overlook the interest rate decision, we should see the pound dollar really just trend sideways over the near term, but really price action remains capped by that 200-day moving average. So might see this range between that 158.90, 159 level, all the way to this 162 level be held over the near term. So keep a close eye on that. But some interesting development here with the euro pound finally breaking support right around this 85.30 level. So now it seems as though we could get all the way down towards this 23.6% Fibonacci, right around that 84.70, 85 level. So keep a close eye on that 85 level. So keep a close eye on that. Seems though we have some more downside risk here, but right now, keep a close eye on this pair. I would say the directional bias for this is fairly unclear. Argument could be made that ultimately we are seeing these lower highs, so in turn, we could see downward trend ultimately come out over the days ahead. But rather than trying to trade this pair, I really prefer, or I'm really more inclined to trade the euro loonie here. Again, we're seeing it test the 200-day moving average. Should hold up as support. We saw it test that a few times, but never really got to close below that. And should we see it close above that 200-day moving average today, could possibly get a good push back to the upside in the days ahead. But keep a close eye on this 138 level here. It's probably more ideal to get long closer to that 138 level here. But in essence, it seems as though we'll see this sideways pressure continue, and in turn, I do favor to buy to the upside, as we do see price action hold that upward trending channel from earlier this year. So could see a potential breakout in the days ahead, but again, don't want to get too ahead of ourselves. So for the near term, would favor playing this range bound price action here to the upside. So could certainly have a potential for that, and I might actually put out a trade later on today based on this. So keep everyone updated on my analyst pick section here. But taking a look at the dollar loonie, again, coming up against this 102 level, which we saw tested a few times already, and should we see a close above there, could suggest that we should see this rebound gap pace, especially as we see support right around that 78.6, right around that 98.80, 99 level here. So should we see a close above that 102 level, could get another run at the 61.8% fib right around that 105.70, 106 level. So some more upside risk for the dollar loonie in the near term. Similar story here with some of the other commodity currencies. Aussie dollar, as we saw, or as we were watching this 200-day moving average, has really broken to the downside right now. So looks as though we could see a potential run at this 30.2% Fibonacci right around that 99.20, 99.50 level, especially as we do see market participants continue to scale back their appetite for risk. Similar story here with the Kiwi, good resistance right around the 78.6% Fibonacci, right around the 80 level. But keep a close eye on these moving averages, because potentially we do have what appears to be a death cross here, as we do see the 50-day moving average and now crossing below the 200-day moving average. And when we take a look at these moving averages, the only time we had such a major development here with these moving averages was all the way back here, back in 2008, during those highs. And once we did get that death cross here, just right around that June period, we saw a pretty big breakdown here. So could suggest that, or this, as we do see these moving averages, or this bearish signal in the moving averages, could suggest that we could see a big downturn in the Kiwi dollar going forward. So keep a close eye on that death cross here, guys. Taking a look at some of the lower yielding counterparts, dollar Swiss really just struggling to hold its ground, especially after we saw the SMB earlier this week float the idea that it might take additional measures to stem the market appreciation in the Swiss franc. So we'll have to keep a close eye on those developments here. But as we did see it finally break above the 220-day moving average, it looks as though we could certainly push higher in the days ahead. Could see another run at this 50% Fibonacci right around that 93, 90, 94 level. Dollar yen, really just flat after we saw it push all the way down towards 77.53, but right now, when we take a look at the other major counterparts, such as the pound yen, really coming under pressure right now, could threaten that yen intervention that we had from the Ministry of Finance, or Japan's Ministry of Finance here, and really could threaten another intervention here. So keep a close eye on those developments. And for now, I would really just stay away from a lot of yen crosses. I know it's very tempting to try to play into a lot of these yen crosses, especially as we do see comments from Japanese policymakers really just saying that they will continue, or they will take additional steps to weaken the yen. So but right now I would say it's really hard, and I would say it's the risk of trying to catch those moves is very small. So rather than trying to trade a lot of these yen crosses, I would look to stay away and look for better opportunities elsewhere, such as the euro loonie. And we'll have to keep a close eye on how really developments out of Europe come out for the remainder of the week. I do think that will really heavily influence market sentiment over the coming days. But we do have Fed Chairman Ben Bernanke scheduled to speak later today, and comments from the Fed Chairman could certainly influence the major currencies. But we also do have comments coming out from ECB members, and just a lot of rhetoric coming out of global policymakers over the next 24 hours of trading. So we'll have to keep a close eye on that. But for the remainder of the day, it seems that we'll see risk really just stay off. But keep a close eye on those comments from global policymakers, because it really could spark a shift in market sentiment. But that's pretty much all I have for today. And again, keep everyone updated on my outlook for the euro loonie. That's one trade that hopefully we will be able to get into before the end of the week. But just want to thank everyone for joining me today, and just want to wish everyone good luck in trading.